What is up, everyone? It's your boy, the coach, Nathan, here with Win with Nathan here at the Lender Guys. Another video. Let's talk about it. Let's talk about the 5 myths in DSCR. So stay tuned. Let's hit it. Hey guys, let's talk about the 5 myths in DSCR loans. And the reason I want to talk about this is because DSCR over the last few years have become really popular. You went from having a few wholesalers, a few lenders that understood it, a few mortgage people that understood it, to now everyone is an expert, right? Whatever. I mean, that's great for the market. It's great for the business. It's bad for the business where people don't get it. So let's talk about the 5 myths, because whether you're a broker, an originator, or an investor, or just a guy learning about DSCR loans, there's a lot of myths out there, and let's bust them, right? I watched 2 videos of a guy who says he primarily focuses on DSCR this morning. Listened to his video. He did a great job. I disagreed with a lot of what he said, because he's capped at what he sees out there, but he doesn't tell you very well about why he can't do those things. And not every lender is the same. So the number one myth with DSCR loans that confuses a lot of people is that a lot of people believe they are only for commercial loans or commercial properties. They're not, right? DSCR loans are built for residential investing. DSCR, debt service coverage ratio, is a ratio within commercial lending that looks to see if you can afford the commercial property. But a DSCR, debt service coverage ratio loan that we're talking about, it's basically for residential housing, right? Buying long-term rentals, short-term rentals, 1 to 4 units. You can go up to 10 units. I've seen some others go a few units higher. But it's mostly focused on residential, right? Short-term rentals, long-term rentals, mid-term. There's a way to do it. There's a way to do even, rent by the room. It's harder, but there is a way, right? So the number one myth that we're going to bust is that it's for commercial only. It's not, right? Go look at the Smokies, any rental neighborhood that has housing, boom, DSCR loans are probably really big there. The next myth that we want to touch on is that a lot of people think only people with tier 1 credit are investors, buying rental properties, they're rich, they do this. I can assure you they're not, right? There's some that are, but a lot of times, a lot of investors don't have perfect credit. The reason for it is because they're always scaling, they're always buying, they're utilizing leverage, so they have more capital on their credit cards, more utilization. They don't always have perfect credit, right? They take risk. So you don't have to have perfect credit. You don't have to have a 7.6 above. You can go as low as 620. It's more down, it's more expensive in rate and the cost, but you can do that. So don't let your credit score stop you. I'm talking with someone right now that's a 672 and they want to buy a place with 20% down on the beach. We can do it, right? And they took it very well of the cost of the rate, and they understand it's because of their credit. And then we designed the DSCR loan so they can refinance in 2 years, because it's going to take them a while to rebuild their credit. So myth number 3 is my favorite, guys. This is out there a bunch. A lot of people believe DSCR rates are sky high, right? One of the reasons for that is they used to be higher than traditional mortgages. They're not backed by government agencies. You also have private lenders out there that do them, and they're probably 12, 13%. We see it all the time out there, right? Private notes always kind of stay the same rate. They don't fluctuate like all the other mortgages. DSCR loans right now, a standard DSCR loan, 25% down, 3-year prepay, and some other loan level pricing, you're probably 7.125, 7.25. I see a lot of Fannie Mae, Freddie loans right now, 25% down investment, they're maybe 7.625. So when it comes to the rate, it's not far off. It's the cost of the rate, right, guys? You can get a better rate with a longer prepayment penalty. You can get a better rate with a better debt service coverage ratio, better credit, and all that stuff. It follows the same thing as every other loan, where there's loan level pricing adjustment. So a non-warrantable condo, a condo tel, all these things are going to add price hits, but it's not that much worse. Now, if you're committing occupancy fraud and you're doing a second home loan, yeah, that rate's going to be far better than a DSCR loan, because you're committing mortgage fraud, right? It's called occupancy fraud. And I have these calls all the time with people. A guy told me today he's debating doing a second home loan or doing a DSCR. And I said, dude, you can't do both. You can't do them interchangeable, right? Is this an investment property? Yes. Well, why are you saying second home loan? Well, that's what the biggest coaches are saying to do. It's a lower rate. Okay, do you plan to stay there? No. Are you going to write everything off as an investment property? Yes. Well, dude, it's an investment property. It's DSCR. So yes, the rate can be lower if you're comparing, a ribeye to a filet mignon, right? You can't do that, right? I'm not here to talk occupancy fraud, but you know who you are out there. Let's see. The other myth is going to be a lot of money has to come down, right? There's some lenders that over the last 2 years, a guy on one of the biggest channels out there, Biggest Pockets, came out and said like you had to have 25% down for short-term rental loans. That mortgage broker didn't know what he's talking about, right? You can do 15% down, seasoned investors. We extended our guidelines to 15% down for first-time investors. So you can do as little as 15% down. Fannie, Freddie, 15% down is the minimum for investment loans. So this whole you need more money down thing, not necessarily true. Now, you might need to put more money down if you have lower credit, if the property doesn't debt service, if you're a rate shopper. Those things come into play, but overall, you don't have to do more. Let's see. The fifth myth, I've already touched on it, but a lot of people believe DSCR, debt service coverage ratio loans, are only for people with LLCs or years of experience, right? I love when I say, hey, tell me, I just want to make sure you're an experienced investor. And they list like 10 properties they've owned for 20 years. And they're like, does that make me seasoned? I'm like, dude, you just had to tell me you've owned one rental in the last 3 years, 12 months. You're a seasoned investor, right? It doesn't take much to be a seasoned investor. However, DSCR loans are great for first-time investors, right? A lot of first-time investors don't make a lot of money salary. They might be young. They might be trying to get financial freedom. So you don't have to be a seasoned investor. What you need to be is you can't be a first-time home buyer. So you have to have owned a house one day in the last 3 years. So these products, DSCR, DSCR Plus, or other forms of DSCR loans, are phenomenal for people who want to get into investing in real estate. Not everyone can go and do tax returns, a 20-year amortization, and do a commercial loan, right? Not everyone can pull off occupancy fraud with a second home loan. Not everybody can go out there with their W-2 job and go afford a Fannie Mae loan, right? A lot of people want to go and buy a short-term rental, and they're trying to buy with their W-2, and yet they can't use short-term rent projections on a rent survey because Fannie Mae says you can't. They say you can't, but yet people do, right? We won't get into that. So the myth is completely busted because you can be a first-time investor, right? The amount of first-time investors we talk to, it's amazing to see how many people are trying to get off that corporation bandwagon and want to try to get financial freedom for themselves, for their family, or to pass down generational wealth, right? So guys, those are 5 myths. They're the 5 most common myths out there. I've done a lot of research to figure out what the most biggest myths are for DSCR loans, and those are the 5 that keep coming up. There's other myths out there, right? DSCR loan, I think, is one of the easiest loans to do if you're an investor. It's allowing you to scale a lot easier than something with your W-2 job. So guys, those are the 5 myths in DSCR loans that we just busted. If you have any questions, or if you have a myth that you might be worried about with DSCR loans, call me. Let's talk about it. I love having conversations with brokers, other lenders. I love talking to other wholesalers, just comparing notes and guidelines. I love talking to investors. And, today speaking to one investor who hasn't bought houses in forever, used to own rentals a long time ago, he couldn't believe what he could afford with a DSCR loan. He couldn't believe that he could buy $1 million property. I pre-approved him up to $2.2 million with the cash he had down. He couldn't believe it. So guys, DSCR is a great tool. Again, if you have any questions, call the coach. Win with Nathan. I'm here anytime to answer any questions. Have a good one.